What's going on, everyone? We have a filing out of FINRA to discuss real quick. Now, this one has been in the works for a long-ass time, since 2009, I believe. And this is a notice of filing and immediate effectiveness of a proposed rule change to kick the can down, extend the expiration dates of FINRA Rules 0180, application of rules to security-based swaps, and 4240, margin requirements for credit default swaps, and amend FINRA Rule 4240, to add supplementary material 0.02. So basically, some background on this. On July 8th, 2011, FINRA filed for immediate effectiveness FINRA Rule 0180, which with certain exceptions temporarily limits the application of FINRA rules with respect to SBS, thereby avoiding undue market disruptions resulting from the change to the definition of security under the Act to expressly encompass security-based swaps. Pending the SEC's final implementation of its rulemakings under Title VII of Dodd-Frank Act, FINRA extended the expiration date of FINRA Rule 0180 a number of times, most recently in January 2020, when FINRA extended the expiration date to September 1st, 2026. In addition, May 22nd, 2009, the Commission approved FINRA Rule 4240, which implemented an interim pilot program with respect to margin requirements for certain transactions and credit default swaps. On June 2nd, 2020, FINRA filed a proposed rule change for immediate effectiveness, extending the implementation of FINRA Rule 4240 to September 1st, 2021. Therefore, both FINRA Rule 0180 and the interim pilot program under FINRA Rule 4240 are currently scheduled to expire on September 1st, 2021. On April 26, 2021, FINRA filed a proposed rule change to amend FINRA Rules 0180, 4120, 4210, 4220, 4240, and 9610 to clarify the application of its rules to security-based swaps following the SEC's completion of its rulemaking under Title VII of the Dodd-Frank Act regarding security-based swap dealerships or depositories and major security-based swap participants. Among other things, the proposal would adopt a new FINRA Rule 0180 to replace expiring current FINRA Rule 0180 that would generally apply FINRA rules to members' activities and positions with respect to security-based swaps, while providing limited exceptions for security-based swaps in circumstances where FINRA believes such exceptions are appropriate. The proposal will also be adopting a new margin rule specifically applicable to SBS, which would replace the expiring interim pilot program establishing margin requirements for credit default swaps. FINRA originally proposed that the effective date of the proposal would be October 6, 2021, to align with the SEC's compliance date of registration of SBS entities. FINRA noted in the proposal that it intended to extend the expiration dates of existing FINRA Rule 0180 and 4240 to October 6, 2021, to align with the registration compliance date and implementation of the proposal. So basically, after consideration of comments on the proposal, as well as further feedback from member firms, on August 9, 2021, FINRA filed partial amendment number 1, and that basically is extending the effective date of the proposed amendments to FINRA Rules 0180, 4120, and 9610 from October 6, 2021 to February 6, 2022. And it also extends the effective date of the proposed amendments to FINRA Rules 4210, 4220, 4240 from October 6, 2021 to April 6, 2022, and conforms the proposed definition of legacy swap and proposed FINRA Rule 4240D12 to reflect the new effective date of April 6, 2022. So there you have it. Can kicking. So basically we have some rules that are expiring from FINRA that have been in the works for quite some time, revolving security-based swaps, things like that. The new effective dates will be April 6, 2022 for FINRA Rule 4240, and it will be February 6, 2022 for 0180, 4120, and 9610. So that's basically it. So we have this to look forward to now next year. FINRA Rule 4240 involves margin requirements and security-based swap registration. And this has become effective immediately as far as this filing. Basically, the reasoning, of course, is it will reduce burdens on the marketplace and it will facilitate investor protection. We will see about that, man. So anyways, there you have it. There's one more to talk about, and I'll get that worked on in just a minute.